Hello and welcome to BloombergQuint. The days of speculating on what the tax implications could be for the unaccounted cash that is flushing the banking system are over. We have with us now the details of the Taxation Laws Amendment Bill that has been introduced in the Parliament to amend the provisions of the current Income Tax Act. And to decode the proposed amendments and to take us through the pros and cons of all the amendments, we have with us Sudhir Kapadia, Senior Tax Partner at Ernst & Young. So, the government has come out with 3 amendments to the Income Tax Act, and I'm now calling it a new income disclosure or a voluntary disclosure scheme. Let's go amendment by amendment to understand, which category fits in where. But before that, can you tell us why these amendments were needed? Because looks like that the current framework didn't account for the deposits that have come through now.
Yeah, I think that's an important starting question, Payaswini, because what we had in the last budget were some welcome and salutary amendments to the penalty law. Essentially, those amendments had more reasonable penalties and also came into force only when there were cases of underreporting or misreporting.
Right.
Now that was in response to the whole issue around harassment, especially to bona fide taxpayers, just because there were differences of opinion between the tax authorities and taxpayers and so on. Now the curious thing was when this whole demonetization was announced and people started speculating that there is a lot of money being washed into the system. You had these issues of runners being used, you had these issues of some exemptions in northeast states being misused, etc. Technically speaking, if the penalty provisions had remained as they are, the amended one as I mentioned from last year's budget, what it would have meant, a possibility was that such taxpayers would have gotten away by actually avoiding penalties altogether. Why? Because as we speak today, taxpayers would have said, okay, I can make up and pay my advance taxes by the 15th of December and then by the 15th of March for quote unquote the unexplained income which I am now depositing in the bank. And when my tax return date comes in for the current fiscal year ending March 2017, I just report my income. So there is no misreporting and there is no underreporting either. In which case, I would say, fine, collect my 35% share of tax, and I'm left with 65%, which is as good as it gets. Which is
even better than the income tax disclosure scheme that ended in September, right?
Absolutely. So these were the kind of legitimate concerns, right, which were being expressed both by honest taxpayers and by government circles as well. So I think this is to answer your question, this is directly in response to this particular unintended benefit which would have flowed. And as you said, somebody would have been better off than even if you had missed the bus in the IDS.
Okay, all right. So let me straight away go to the first proposal, sir, which is provisions for taxation and penalty of unexplained credit, investment, cash and other assets. This, as you earlier mentioned, is section 68.
Right.
Under the existing provision, a flat rate of 30% plus surcharge plus cess would have ideally been implemented in the example probably that you had given,
absolutely,
right? But now the proposed provision is an amendment to section 115BBE.
Yes.
A flat rate of tax at 60%, a surcharge of 25% of the tax.
Right.
So a total tax incidence of 75%,
right,
plus a penalty section amendment, which is to 271 AAC,
right,
where a penalty of 10% of tax payable in
right,
addition to that of 75%. That makes it an effective tax rate of 82.5%.
Absolutely.
Okay. So now tell me, sir, that when you say provisions for taxation and penalty of unexplained credit, investment, cash and other assets, what categories of money can go under this
right
section?
So let's take an extreme example just to illustrate the point, right? I am a taxpayer with reported income of, let's say, 1 crore, right? Now suddenly I have gone ahead and deposited whether somebody else has given me the money or actually my own black money of 100 crores in the bank, right? This would clearly be, I would find it very difficult to explain the source,
Right.
unless I can show that I have won a lottery
Right.
during the year of that order of magnitude, right?
Yeah.
In which case, simpliciter, if I do nothing else, right? What will happen is, as you correctly pointed out and calculated, 82.5% is what I get stuck with
Right.
as a tax, overall tax incidence, which is obviously far more stringent
Right.
than what in my earlier example, as I said, I would have gotten away with a much more benign and normal incidence of 35% tax. So
Right.
what they are trying to say is, guys, if it is unexplained, then you have no business to get any benefit.
Right.
It is unexplained. That means it's clearly, black money.
Right.
So we are making it so stringent
Right.
that we are almost making it, the cost is so high that you might as well as, burn that money, or still, even if you still, get caught, 82.5% is a huge amount.
Okay. We will do the cost benefit analysis
Yeah.
of each of the amendments,
Yes.
sir, once we go over all the amendments,
Yes.
right? The second category they have mentioned is penalty for search seizure
Right.
cases.
Right.
In which case today the penalty would have been 10% of income if it is admitted,
Right.
and 20% of income if not admitted, and 60% of income in any other case. This is over and above the 30%.
Over and above the tax.
Over and above the tax, which
Correct.
in current situation would be 30%, 35% with surcharge and cess, right?
Absolutely.
But the amendment they're now proposing is 30% of income if admitted, return and taxes are paid, and 60% of income in any other case. So this will also be over and above the tax
income.
the tax incidence,
The income
right?
tax. Over and above the income tax under 150 BBE.
Which is 75%.
Absolutely.
Okay. So now do we know the base for this penalty?
No, so what they are trying to say is that one is in my example where I have in a way volunteered and said this is unexplained.
Right.
Right? Now take one more further extreme example where I decide to do nothing and thick-skinned I said, all this is talk, nothing will happen, and there is a search and seizure and there is unexplained cash which is recovered, right? Then in that case it will be so stringent in this example that over and above this income tax which I have to pay in any case,
Right.
the penalty itself, if I then accept it, it will be still 30%.
Okay.
Right? If I don't, it will become 60%.
So which is that if I am, once that search and seizure happens,
Absolutely.
I try to contest it,
Correct.
right? And in that probably litigation period, if it comes
If
out
I
that
ultimately lose,
then the incidence would be 60%
Absolutely.
of income.
Absolutely.
And this is again, like you said, over and above the 75%.
Right.
Right? Okay. The third sort of proposal, sir, is what I'm calling a master stroke.
Yeah.
Which is
This
the
is the killer app.
Yeah, which is the killer app. Pradhan Mantri Garib Kalyan Yojana, which the current provisions for which don't exist. But in this case, they say that undisclosed income in the form of cash and bank deposits can be declared.
Now just pause here. In
Sure.
the form of cash and bank deposits, a very narrow limited
Okay.
to
yeah.
cash and bank deposit, clearly aimed at what we are dealing with currently, the demonetization
Right.
initiative.
Right, right. So in which case they have put the tax surcharge penalty, which is a total of 50% of income,
Right.
and 25% of this cash and bank deposit that you do
Right.
would be deposit in an interest-free instrument or a scheme for
Right.
4 years.
Right.
Which psychologically, sir, looks like that you're what, paying 50% tax?
Absolutely.
But there is you're losing on
There's
the
a time value of money,
Yeah.
but please remember if it is in cash,
Even today, it's not earning anything. Okay.
it's
So-
anyway with the stench smell and all, right? So,
Right, right. So we're gonna give a fragrance to it now of Garib Kalyan Yojana.
Right.
But compared to the earlier two sort of amendments that we discussed, sir, from my conversation with you a little while ago, it seems like that this is the most attractive of the lot.
Right, so absolutely, I think what is being attempted here is two things. One is very clear, the base case is the income declaration scheme. You don't want a dishonest taxpayer
Right.
to get away with either the same or even better result
Then what the
than what
earlier
was
scheme?
available.
Yeah.
So that I think is a base case benchmark, which I think is the right thing to do, because that was the main critique coming in
Right.
the context of what I just said earlier, that this is actually unintentionally though, but actually you are giving a nice amnesty at a lower cost. So that is taken care of. So that's the base case. So what you have done is you have said you paid 45% there, here you have to pay now 50%. The cost for not, and as you rightly said, by the way, 25% is locked in. without earning any interest, and what you have available with you is the balance 25%. What a taxpayer in such a situation will do then is compare this with what we just discussed earlier.
Right.
That if I myself going to declare to buy peace and not avail of this scheme, I will end up with 82.5%, which is a non-starter.
Right.
I mean, that's clearly, why would I do that? And if I am thick-skinned enough to say, let me fight it out, let me, let the search happen, all of that, the cost will be so high if I lose ultimately, that in most cases, my prognosis on prima facie based on reading this is that in most cases where the explanation is going to be proven very difficult for a taxpayer. In this example of 1 crore reported income versus 100 crores, clearly it will make far greater logical sense for a taxpayer to opt for this alternative voluntary disclosure scheme. I think that is the idea, that is the objective, and I suspect this will find a very good response simply because it is relatively far more attractive. And certainty, no litigation, peace of mind, and there is no question of, what could be the increased tax should I lose ultimately in my contention.
Understood. So then why have the first amendment at all of section 115BBE? Why amend that at all?
Well, I mean, because you can't assume everyone will avail of this scheme for whatever reasons.
Okay.
If people, and just one more clarification. The amendment there, it's interesting, they have used this insight, I would say, thanks to this demonetization, to plug what possibly could have been a more benign outcome when it comes to unexplained credits.
Right.
What I mean to say is this provision applies to all unexplained credits investments. Cash is only one of the specified unexplained assets.
Okay.
This scheme is only applicable, the Pradhan Mantri Garib Kalyan scheme is only applicable for undisclosed income in the form of cash and bank deposit.
Okay.
But there could be, like for example, somebody in his business has got unaccounted money, right, which is not lying in cash. It can be lying in the other criticism, right, to say black money could be in other forms.
And the other assets as well.
And other assets as well. This, the main amendment which we talked about, will cover all of those.
Okay.
As well.
Okay. Okay.
So what
so it covers a wide array of instruments.
Anything which any asset which is unexplained, which is already there in the law, is taxable as it's put here at 30%, right? It covers any unexplained asset. What they are saying is that, by the way, if it happens to be cash and bank deposit, you have this option.
A slightly more benign, if I can call it, taxation.
Because the scheme is on, you can avail of it.
Okay, all right, understood. Sir, so I just go back to this. When you say other assets, it will include property as well, because a lot of talk is
it could be any, unexplained credit, investments, its properties and investments, gold, whatever.
Okay.
So the point is that in what is interesting is that in the case of this 82.5%, what remains to be seen is that, and that I think jury is still out. I am not too sure. It's a very steep 82.5% cost. Whether people will come out with other than cash, which is unexplained for argument's sake, that is not very. I mean, I don't know how many people will bite that bullet.
Okay. Okay. And
clearly people will find this scheme to pay 50% Pradhan Mantri for cash and this clearly attractive.
Correct.
Whether they will volunteer on other unexplained assets and then prefer to pay 82.5%, that I think it remains to be seen.
Okay, okay. But with the government saying that, okay, we are going to crack down on other assets in the times to come, maybe people will do a cost benefit analysis of that.
No, I mean, absolutely. One can't rule that out either.
Okay, and another interesting observation, so we should point out, that we made offline was that the surcharge and all these options is pretty high, so none of this gets shared with the states.
That goes directly to the center under the scheme of
so
sharing.
Not to those who are celebrating Akrosh Divas today. Alright sir, thank you very much for telling us the pros and cons of the proposed amendments to the Income Tax Act, and thank you for watching BloombergQuint.